Okay, so let me put this on the screen. Okay, so the checklist, we have here the profit and loss checklist, and then the actual profit and loss statement that you are going to take all your expenses for the whole year and put them into categories and then put the total for the whole year on this form. So when we look at different types of income, not everyone has the same type of income as other people. Other people are cash-based. Some people have merchant accounts. You might do a barter with somebody, or you might even do a exchange of services. And the IRS's eye of what income is and what you have to claim, according to them, it is any income that you get that that isn't a gift. So, and any large sum over $600 has to be reported on a 1099. But things you don't have to report on a business return, of course, we want mainly business income on a business return. But I'm talking about in general on your taxes. If you're a sole proprietor and it goes on your personal taxes, then this is the same thing as just putting it on your business or on your personal return. So we have different type of income. You have sales and services. Sales are mainly products. Services are doing something for money, either accounting services or personal training, something like that. So that's a service that you did something and you got paid for it. Other things that you could bartering is when, let's say I'm an accountant and you are a personal trainer. And for me to do your taxes, we agreed that you would do 2 hours of personal training with me. That personal training could be, if it's equal, right? Like the way you would do it is you would put the income of, let's say it's $200 equal. I would put the income of $200, but then I would also put the expense down below for $200. And it would literally just balance itself out and we keep going. The difference is let's say my accounting service is $250 and I got the expense and they only gave me $200 worth of service. Technically, I have to discount my service to equal the expense. So it could get tricky sometimes, but luckily most people don't deal with bartering anymore or exchanges of service. And we can just talk about sales and income. So if you have, the best thing is if you have you actually kept your books, your checking account separate from your personal. It gets a little more complicated when you're talking about doing everything out of one account, but it's not, if you're a sole proprietor, it's all mixed together anyways. If you're an actual LLC or an S Corp, then that's definitely a no-no. You want to keep those separate. So when you have, if you have your bank statement, just go through and do all your deposits. And what I like to do is take my bank statements. I'll have probably 3. It's better the more colors you have, the better of highlighters. I make me a little table that has the color with the category. So I always put money as green. So I always put all my money coming in as green. And I will go through all my bank statements and highlight all the income coming in, right? And then I'll total that up, and it goes at the top up here, right? As sales, all money coming in. If you have a cost of good or a cost of service, this most people who do service don't have a cost associated with that. A cost of good, if I am selling a product and I have inventory, then that is my cost of good. And then the difference after that is total sales revenue, which means from there, all operating expenses come out. So cost of good is everything that goes into to produce a product or service. And then you have your operating expenses on top of that. So shipping is considered cost of good. Let's see, let's go back to the checklist because I have it. So inventory, usually you need to have a beginning inventory, how many you purchased, and then an ending dollar amount. So I own a vape store, and I have about $10,000 in beginning inventory. I actually use an accounting software. If you are dealing with inventory, you definitely need an accounting software because you just can't keep up with it otherwise. I use ShopKeep, which keeps track of my inventory. And then you have your inventory purchases, everything that I bought in 2021, because this is the tax year we're talking about. And then at the end of the year, what do I still have? It also includes materials, supplies, and any items you remove from inventory for advertising. So if I'm selling a clothing and I have a dress that I bought is part of inventory, which is there's no sales tax on, and I take that out of inventory because I'm going to put it on a model in my store, then that's no longer part of inventory, and you take that out. In that, you would put that cost in advertising instead of cost of good. So that's how that would work. All right. So since after you get cost of good, then you just have regular expenses. So what I like to do is take my highlighters, make my table. Some of the most common expenses you're going to have are meals. So I usually do that in a highlight. I do gas or car expenses, and I put that as a highlight. Other ones could be legal services or office or supplies. So those are another two that are kind of big. Obviously, the more colors you have, the more you can get down and like do more different. You might have one for advertising. Now, here I have it broken down from lead generation, website, and marketing materials. Marketing materials are websites, brochures, business cards, paper goods, anything that markets that you hand someone is a marketing material. A website, of course, is anything on the web. And then lead generation is things like Facebook, Instagram, telephone calls, telemarketing, anything that is targeted marketing would be lead generation. Okay, so that is a difference, but it all gets put together in one lump sum on the tax return as just advertising. So if you were to have different categories, I would just prefer you just get me one lump sum, but some people like don't know all the different categories, so I put different ones up here. All right, so you got your highlighters, you got 12 months of bank statements in front of you. You're going to take that and you're going to now find your categories right in here. And the reason we did meals, because most people will eat out, supplies, and it says supplies and software. Let's go back to the checklist, and we're going to go through each of these. So we talked about advertising. Phone lines. Now, phone is a little different. If you have a landline and it's your house landline, you really can't include that unless you add a second line. But you could always say your cell phone is business related because it goes with you everywhere. If you answer phone calls and things like that, you can add phone. Plus faxes are considered phone. And then you have your internet and computer expenses. Internet is, of course, your Wi-Fi, your internet. Computer expenses could be, I wouldn't say subscription. These aren't things related to your computer, but email, right? Email is a type of communication to talk to your clients. So that would count under here if you have an email service. But it's not software stuff. That's in a different section. Meals. So meals, the rules have changed a little bit this year versus last year. Used to be you could only count meals if it was done with an employee. If it's done with a client, you don't want to count it as meals. You want to count it as promotions. So if you're doing something with a client or you're going out having drinks to talk about a deal or whatever, that would be under promotions, not meals. Meals are only done with employees or shareholder meetings and stuff like that. Transportation and travel. So you got actual transportation, which is airplanes, bus, tolls, things like that. And then you have your travel, which is hotels and motels, and you don't want to include food in here. Food goes up here under this. Now, that is one time where food that you do as only yourself, you can do if you're traveling. So you can say, okay, well, you know, I'm traveling. There's no way I could sit there and go home and, you know, cook. So you get what they call a stipend, which is usually you could say, I think the IRS says you could do up to $13 a meal, up to $52 a day in write-offs for meals when you're traveling. So here I have traveling away from home. So this is traveling when it's local. You have mileage, public transportation, parking, tolls. This is part of auto. And then you actually have travel, which is airfare or mileage driving somewhere, hotel, taxis, anything that the hotel charges you, like internet connections, the cafe or parking, that all counts as part of transportation. Commissions paid to subcontractors. So usually if you have a subcontractor, if it's over $600, you have to do a 1099. It's no longer a miscellaneous, it's an NEC. So you might want to consider filing that if you have that, but most people don't have contractors, so they don't have to worry about that. Depreciation is if you have a car. Most of the time, depreciation is of assets owned by the business. So your car, if you're driving your car back and forth to work, this is usually something you don't generate. It's usually something that our software calculates for you. So what we get is we have car expenses. I have to have the year or make and model of the car, what you purchased it for, or fair market value. So let's say, for instance, my car is actually worth more now than it was before. So if I wanted to basically say I'm using it for my business, I would use my fair market value, not what I purchased it for. I purchased it for for 21,000, and right now I think my FJ is like 36. So I want to put that here. The start of use date is not the date I owned it. It's not the day I bought it. It is the day that I decided I'm going to use it in my business. So if your business started June 1st and you decided, okay, I'm going to be using my vehicle for the business, then you would put June 1st. And then, of course, business miles. This is the miles you drove only in the business. It's not your total mileage for the whole year. If you have a 9-to-5 job or a W-2 job, then you can't include those miles as part of miles for business. Then you have, here we have you wanting to put all of your expenses, repairs, maintenance, gas, any of those type of costs for the car go here. Interest, if you have a loan on your car, you can write off the interest. If you paid parking and tolls, and the reason these are separate items from the cost of the car is because on the tax return, they're actually treated separately too. They're not part of normal car maintenance, but they're part of car expenses. So they have them separated out. Car insurance is also allowed to be written off, but that would be put over here under business insurance. So if you have a car that you have insurance on, you can actually write the insurance off also. All right. So one of the other things we do is we take those numbers you give me, the sell price, and things like that, and we figure out your depreciation. If you bought a lot of assets for your business, a computer, printer, if you own a farm, maybe you bought a tractor or let's see, a tractor, or let's see, if I were, give another example of another industry. If I was a truck driver, I probably bought a trailer or an 18-wheeler. So those are just assets owned by the business, not necessarily a vehicle. So a trailer is not considered a vehicle. It is just an asset. So you would want to give me those. Maybe there's not actually a section on here for it, but you would definitely want to write it down. Let me know that, hey, I bought a trailer and this is the year I bought it and this is what I paid for it, so that you can get the depreciation on the asset. You're not supposed to, on an asset, unless it's leased, if you bought it, you're supposed to depreciate. If you leased it, you can write off the payment, but only if it's a lease. We talked about business insurance, and there's different types of business insurance: liability, errors and omissions. This is usually for people that are in the insurance industries and financial industries. They have errors and omission insurance. And then, of course, you have casualty loss for, like, car insurance, business insurance, things like that. Interest expense. So interest expense, we talked about it for the car. The other places you have business expenses would be on a business loan, credit cards. Most people, spend outrageous amount on their credit card, and they bought, maybe you bought stuff for your business on credit card. You can actually write off the interest on those credit cards that you're paying that year. Other things are, if you have a building for the business or you have investments. A good example of an investment is if I have an RV park and I bought 3 RVs, and those RVs all have a loan on them. It's not necessarily a building. It's not necessarily an automobile. So it would be an investment, and maybe I'm renting them out. That's pretty popular right now. And so that would be an investment, and I could write off the interest on those loans. Okay, professional fees. This is lawyers, accountants, consultants, anyone that doesn't really, you don't normally 1099. They actually probably invoice you and send you an invoice. That would be something you would consider a professional service. Other things that could be professional, if I had, let's see, I had a thought. It was how to do it grooming. If I was a groomer and I had a company come in and sharpen my scissors and my knives and stuff like that as a professional company, that would be a professional service, not necessarily a 1099. Okay, office supplies and software. So because software, so the definition of an office supply or software is something that you would buy and use within a year. So because most software is a monthly subscription like Adobe or Microsoft Office or your antivirus or even just software in general, my tax software is a year. I bought it and then I got to buy it again. It doesn't stay around forever. My QuickBooks software, again, a monthly subscription. So because it renews and you use it up and renew it, you never get your money back on it. The IRS considers it a supply. So you have things like pencils, paper, consumable items, and then software all underneath this category. Rent. So rent, you could have the traditional rent expense, which is, okay, I'm going to go rent a space in a building, and that's going to be rent. You could also, any kind of rent for the business, like a lease, a vehicle lease, that's where you would put rent. Other rents would be, if in this case, this is not home office space. We have a separate place for home office, but let's say you're doing this for an LLC and you're treated like an S Corp. And on an S Corp form, they do not have a home office. So the way we look at that is we say you as the person are going to rent space out of your house for the office. So if I, as a person, the business owner, I am renting my living room or my den to my business, I need to come up with a figure that I say is rent. It's not like a home office space that's done on a Schedule C or on a sole proprietor type form where it's based on a ratio. And in those kind of forms, on a business, there's nothing like that. They just want to know what your rent is. So you have to come up with an idea of what that rent is. For me, I like to say anything between $300 and $500 a month. Now, if you have a 4,000 square foot house and you're using 600 square feet of that for the business, you may want to say your rent's a little more. Most people use a room space about 12 by 13, sometimes 12 by 10, anywhere between 12:10 and 12:13. So that's about, $300 to $400, $500 a month. So you just tally that up, and that's what you would want to put as your office space rent. The great thing is because rent is, because I own the house or I'm leasing the apartment, I do not have to count it as income on my personal taxes. So it's really just what you want to say. You don't have to claim it as income. And you could say, I wouldn't do anything ridiculous, like say it's your whole rent, because you got to think about it. If your whole house is $2,000 a month and you're only using 1/10 of it for the house or the office space, that's not reasonable. The IRS will catch on and you might get in trouble. So, you got to keep it within some reason. All right. Bank and merchant fees. Bank fees are pretty typical. Most people see them. You have an overdraft fee. It's a bank fee. You have a monthly fee, maintenance fee, $10, $12. Pretty typical. Franchise or the merchant fees, sorry, not franchise fees, but merchant fees are credit card processing fees. So if I have a credit card machine in my office and I'm taking credit card, then I'm going to have a fee that the merchant is going to charge me to allow me to use credit cards. That's merchant fees. Franchise fees go a little bit different. They go under like dues and things like that. So taxes and licenses. Taxes would be personal property taxes that you might be charged by your county. It could be sales tax that you had to pay from the state. Anything tax related could go there. Licensing is if I am if I do what is that? And cosmetology license, and I had to actually pay for the license from the city or the state. That's where that fee would go. Okay. Office expense. So just like most people want to know why supply is different than office expense. So like we said, most things that go in office expense are used up within a year. There's things that you buy for the office and you use up. So that's a supply. Things that go in office expense are things that last longer than a year. Equipment, a printer, a stapler. Let's see, what's another good example? Filing cabinets, a desk, a chair. You wouldn't put it as an asset and depreciate, so you would put it as an equipment purchase. It also includes your utilities, but sometimes utilities can be separated out. When we talk about these type of utilities, these would be lawn care, or maybe you have a cleaning crew come in. That would be more along that line. If you're doing, we're not talking like gas, electric, and water. Those are actual utilities, and they're on our form. They have a separate line item, right? So this utilities is only if you have a space that you rent in another building. If you're using your home, then you should just include that in your rent. All right. Other things that might be included in office expense are shipping, both for supplies or shipping. If it's shipping for, like, you are shipping to a client, that kind of shipping should be in cost of good. This is more shipping like for things you're bringing in for the office. Like if I bought 5 chairs, I had to pay for that shipping. So that goes here. All right, wages. So if you have employees, pretty self-explanatory. This includes all W-2 and you need a W-2 form for each employee. You need to make sure that you file all your proper forms. For us, all we need to do your taxes is the total amount of wages you paid, total amount of taxes you paid, and then if you paid any employee benefits. If you have contractors, we talked about that up above. So that would not necessarily be wages. This is different. Okay. Other expenses. So these are some of the rare things on here. We have franchise fees we talked about, and associations. These are dues. If if you are, if you actually franchise with a company, like Carm actually sells a franchise that you can, be part of our business, and we're going to charge you a fee for that, for using our name and our reputation, right? So that would be a franchise fee. An association fee would be like the Chamber of Commerce, or some kind of, if you're a chiropractor, you might be part of the Chiropractic Association of America or something like that, right? So those are association fees. All other expenses, are we just down? Yep, that's all we're down to is other expenses. Okay. So facility maintenance, repairs, things like that. If you repainted your office, right, you can actually write that off as a repair. And since it's all done in the office, you can write it off dollar for dollar. If you painted the whole house, let's say the outside of the house, it's technically you should do a proportion. You should do a portion of it and say, if it costs $2,000 and the house is 2,000 square feet and your office is only 200 feet, then you would probably say, 10% of that 2,000, so $200 is what you're going to write off as your expense. Estimated tax payments. This is if you pay your taxes. If you think you're going to have a profit at the end of the year, you may want to pay taxes if you think you're going to owe taxes. The IRS requires that you pay that every quarter, which would be the first payment being in April 15th, and then July 15th, August 15th, and then January 15th for the fourth quarter. So if you owe money, they used to not do this, but they are starting to penalize people who don't pay their estimated taxes. So if you know that you're going to pay taxes at the end of the year, you need to think about paying those quarterly taxes. Other things, healthcare, medical premiums for sole proprietor, and other insurances you may have. And that's pretty much this in a nutshell. If you have a home office space, if you are a sole proprietor and instead of a corporate, we ask that you put the square footage of the house, the square footage of your office space, and then give us how much interest you paid, property taxes, your mortgage insurance, repairs to the office, utilities, and any other miscellaneous home expenses. And we actually calculate your home office expense versus rent. Rent, we only want to do if you are an LLC or corporation and you are filing on a corporate return, not a personal return. Okay, so that's pretty much the profit and loss and the checklist. So all you have to do is figure out your categories, what you spend in. Now, every business has different expenses from another. That's why the IRS wants to know what your industry is, because based on your industry, they have what is called benchmarks. And they know, so if I am I'm a tax professional, I'm not going to have huge expenses for mileage because I'm not driving a truck. So if I have like 40,000 miles that I'm trying to write off for a accounting business, that's going to be a red flag to them that, and they may audit me on that. So that's why they ask for your industry, because they have, based on that, they kind of know on average what expenses are allowed and not allowed. So that's one other thing to keep in mind. Not every business has the same expenses. Your industry may be different. They may not cover these. If they don't, you can write something in. You can mark this out and write what your expense is that you have that's more prominent. One thing that's not on here, if you're in entertainment or an actor, actress, singer, songwriter, you have more appearance stuff. And appearance is hard because if I am a singer, I may buy a lot of clothes. My hair is important. My face is important. Makeup's important. So all of that is part of my image. And that would need to be put in here as appearance, where me as an accountant, I may need to buy a new shirt with my logo on it every once in a while. But other than that, yeah, I'm supposed to look good and have my nails done or something. But it's not a necessity to the job. It's not something that I have to do in order to do my job. So therefore, the IRS technically will not allow it. A lot of people get that confused with what they want and what is necessary to do your job. Eyelashes and you're a groomer, not a necessity. Eyelashes and you're a dancer, a necessity. So that's just a way to think about it. I hope I answered almost all the questions that have to do with the checklist and how to fill out the blank form for your business. One other thing, let me forget before I forget. Put your year that you're doing this for and the business name at the top. Make sure you sign it, because this is the only form that the IRS accepts as a legitimate business form, a profit and loss. You can't just give me a bunch of receipts. This is legitimate. And once you sign and date it, we can actually file this. If you don't sign and date it, we're not going to accept it. All right. I think that's everything. All right. Have a great day. How do I do it?